Rid. Today on the Income Flip podcast, we've got Carlos Samaniego with me from Cali. Carlos, welcome to the Income Flip podcast.
Thank you for bringing me on. Yeah, Callie. The last time we talked, it was beautifully sunny. Now we're expecting this massive storm coming in
Man,
later
it's,
on tonight.
it seems to
So,
be storming everywhere. I'm in St. Pete, Florida right now, opening a new office, and it's storming here
oh,
for
is
sure.
it?
Yeah.
Yeah, we
Yeah.
got a weather alert. We're going to get 4 inches of snow. Not very often you get that in Southern
What?
California.
That's crazy. That's crazy. Well, let's talk a little bit about you, your background,
Yeah,
taxes, debts, the IRS, all that stuff because I'm looking forward to this conversation, right?
yeah,
I know a lot of real estate entrepreneurs can get themselves into trouble,
right.
and hopefully, what we can do is we can help unf them, right? And we can help them maybe curb some bad habits that
Yeah,
might get them into trouble. But before we go into all of that, let's talk a little bit about you, my friend.
yeah.
Tell me about you. How did you get started in this wonderful world of real estate and taxes
Taxes, yeah.
and all the rest?
Well, I can tell you this, Rob. I didn't wake up one day and said, "Hey, I want to go fight the IRS for a living." That's not a dream that we all have, right? Um, Actually, my dream, kind of coming out of high school, was literally to join the military, to become a medic in the Army. That was actually my ultimate dream. My dad was a Vietnam veteran, served as a medic in the Army, so I had that dream. Ended up joining the military at 17 years old, and did spent a few years there, and then realized that wasn't a dream I wanted, and ended up doing 3 years back in the early 80s, getting out of the or early 80s, late 80s, into the early 90s. I got out, and I actually I liked the medical aspect, the helping people, helping with emergencies. So I ended up actually becoming an EMT paramedic. The EMS workers that are out there, and love that type of work. And what was great about that type of work is that at that time we were only working 10 days a month. We had 24-hour shifts, kind of what a lot of firefighters actually do. They do 24-hour shifts, and that was great. And that was the beginning of kind of my entrepreneurial spirit, because I was only working 10 days a month. I'm like, hey, there's a lot of things I can actually do, right? So I actually started learning how to. Today you would call them side hustles, right? I had started a whole bunch of side businesses, got involved in network marketing, actually started making some pretty good money in the network marketing industry during this time frame. But also something happened during this time frame that I ended up taking some financial advice from a person that you shouldn't be taking financial advice from. And that's a big thing for all of us to learn, right? Take financial advice from somebody that's actually knows what they're doing or knows what they're talking about. The financial advice I had gotten, I was actually working. It was about a year or two into my EMT experience, and I was working a whole bunch of overtime during the holiday season. And the older guy, and I always say the older guy, he must have been probably in his early 20s, maybe 20, 21. He had asked me, Carlos, why are you working so much? Because I was doing a lot of these 24-hour shifts. And I said, hey, I got to make some extra money for Christmas here. And he goes, hey, if you go to human resource, claim 10 exemptions on your W-2, on your paycheck stub, basically, they won't take out taxes. You're going to have a lot more money, and you don't have to work so much overtime. So being a naive kid, that's exactly what I did. I ended up
You're like,
doing this.
more money? Sounds
Oh yeah, I
great.
got this all this extra money. Especially when you're working a lot of overtime, you're getting all this extra money. Well, fast forward a few months, going into tax filing time, kind of like we are right now, right? And went to go prepare those taxes and realized I had a big balance due. And what I did is what a lot of people, a lot of people in general will do. If they have a balance due, they're afraid to file their taxes because they may not have the money to pay the taxes, so they just don't file. So I did that first year, and unfortunately, I didn't learn the lesson right there. And I continued working, continued doing overtime, never changed the W-2s. And then
Oh,
1 year flash forward another year, I go back to prepare the taxes. The balance is even bigger. And now I'm really freaking out. So I don't file the taxes. Make a long story short is I literally went 8 years doing that. Eight
Oh.
years of not filing my taxes, Rob.
Yeah.
And, back then, not,
And you were
today,
young. You were young. You were young.
yeah,
Like,
I was in my 20s, literally in my 20s, and, I was having a good time, big paychecks. I went from that studio apartment to a one-bedroom apartment. I went from that used car to a brand new car because I was living it up. And and we see this, Rob, doing this work now. I see this, entrepreneurs do it, self-employed people, real estate people, they don't pay their estimated taxes, and then all of a sudden they have this big bill or because their lifestyle, and everybody does this, and we know this. I was listening to a podcast the other day that said, I've seen $1 million earners pay every dollar out for living expenses, and I've seen people making $10,000 a year paying every dollar out. Is that we live up to our income that's coming in. So that's actually kind of what started this process. And make a long story short, I ended up losing my job. Losing my job not too long after that. More so because it was an insurance, an ambulance insurance license. What had happened is I had 2 accidents in the same year. And what happens in an ambulance company, they can't insure you to drive an ambulance if you have more than 2 accidents. Very common in the commercial, when you're driving a commercial vehicle. And they had given me an ultimatum. They said, hey, we can't let you be in the ambulance, so we're going to give you a 9 to 5 job until your probation kind of goes away and we can get you back on the ambulance. And by that time, I had actually been making extra money, doing all my side gigs, getting involved in network marketing, was making really good money now at network marketing. And I ended up losing that job. I told them I didn't want to work a 9 to 5 job, so I'd rather just basically get fired. They gave me the option, quit or get fired. I figured, hey, get fired, and I'll get unemployment for a few more months, and then I'll just kind of stick to my entrepreneurial dreams by this time. So here I am. I'm this guy with no job, self-employed entrepreneur. Believe it or not, Rob, it's ironic. I actually started doing taxes for a living as part of my side husles.
Side hustle, yeah.
I was doing taxes for people, and this was a guy that wasn't even doing his own taxes during this time frame. So here I am, and people say, well, didn't the IRS ever come after you during this time frame? Believe it or not, they did not. They never came after me. And I think it was more back in the 80s, 90s, even to early 2000s. We weren't as interconnected with via electronics, right? ATMs, everything's kind of digital. Everything was, they would have to mail you your statements and all this stuff. And it wasn't until the state of California a few years later, a few years later, the state of California, I'm now in my early 30s, they sent me a letter saying, hey, we noticed you haven't filed last year's taxes. And then I knew I'd gotten caught. Because once I got that letter, I had to respond.
Yep.
I get this letter, and fortunately for me, I was able to deal with the state of California. They were not as aggressive as they are today. Got that resolved, but still hadn't gotten that IRS thing resolved. But I knew something was going to happen because IRS and the state, they both talk to each other eventually. And by this time, I actually ended up getting into the real estate business. I ended up getting hired as a mortgage lender for Chase Manhattan Mortgage. A gentleman hired me, said that he thought I'd be a good lender back then. And now we're like late 90s. He had actually said, I think you'd be really good. Sent me off to New York City. First time I've ever traveled to New York City. I got trained as a mortgage lender there in downtown Manhattan.
Good timing.
What's that?
Good timing.
Oh yeah, it was great. It was perfect timing.
Yeah.
Because now I'm making some big money. I mean, I was
You
closing
started
quite
getting a run up 99, 2000, 2001, 2002.
Bingo. So you're seeing the timeline here, right?
Yeah.
So I'm doing this business for about a year, making some excellent money with mortgage lending, and then I happen to get a client, a potential client that reaches out to me. Let me back up. My real estate a friend of mine that I had partnered up, that I was doing her loans, referred her a potential client that wanted to buy a house. And this, she told me, call this girl up. She's interested in getting pre-qualified to buy a house. And next thing you know, I end up talking to this person. She ends up coming into the office, and I ended up inviting her out to lunch. And I knew that first day I took her to lunch, I would marry her. So I ended up not closing the loan. I referred her mortgage to a friend of mine. He ended up closing the loan, and I ended up closing the deal with her. Her name was Elizabeth, and I ended up marrying her. And this is where things get bad, because I had never told her my non-filing of taxes, that the IRS was after me. I had almost $100,000 in tax debt that I owed, combined between the IRS and the state. And I did the scumbag move, which nobody should ever do, is I married her, and she married into my tax problems. And Rob, I knew right then what I had actually done to her. And I knew at that point in time, and people always ask me, well, why didn't you tell her? Well, we all know why, because if I told her, she's probably going to leave me, right? That's what I'm thinking.
Yeah, you had fear around it. You had fear around it.
Yeah, there's this fear, this anxiety. She's just going to bolt. I'm not going to continue dating a loser here. So, but I ended up doing a fast amount of research at that point in time. Is I got to figure this out like fast. So I ended up doing research and finding out there was only 3 people in the world that could actually resolve tax debts, represent you for the IRS. There are attorneys, CPAs, and a thing called an enrolled agent. So once I found that out, I didn't realize there's somebody that specializes in this type of work. I had reached out to this guy locally. His name was Ernie. And I remember Christmas Eve. I had called him up. He said, I can only meet you on this day. It happened to be Christmas Eve. It was only 2 blocks from the house that we'd actually got married and moved. We'd actually lived right down the street from each other. So I went down there Christmas Eve, and Ernie sat down with me at his desk and said, Carlos, you're not a bad guy. You made a stupid decision, but we can fix it. Anything can be fixed as long as you're willing to get it fixed. And once I had that conversation, I went to Liz, and I sat Liz down, and I said, hey, I got something I got to tell you. And she was nervous. She didn't know, what the hell are you going to tell me, right? Because I was shaky. I was nervous. And I told Liz what had happened. And she asked me, so what do we do here? And I had told her, I found the solution. I found Ernie. He's going to help me with my tax problems. Because I figured if I'm going to bring her with the problem, I better bring a damn solution to this situation.
Yes. I tell my people all the time.
Yeah, so I sat down, and fortunately for me, she did not leave me. She said, let's do it. Let's get this resolved. And that was almost 20 years ago.
Crazy.
Literally. 20 years ago that all happened. And interesting, I talked about I was in the real estate industry. Well, obviously all that came to a crash around 2003. The real estate industry pretty much imploded, and I didn't know what I was going to do with my life at that time. I actually almost became a minister during that time frame. After I got out of the real estate industry. Actually, I left lending. I ended up getting into real estate, thinking I was going to be a real estate agent. And again, the whole real estate world imploded during that time frame. So
it was more like 2007, 2008. The implosion started happening.
That's right. There you go.
Yeah, you.
I'm getting my dates out. Yeah, right around that time frame. It's when all that stuff started to happen. But I actually, and again, as I said, is that I didn't know what to do. I almost became a minister, went to training to become a minister, and I knew that if I went this route, I still had 2 kids. I had 2. No, I had one, my son, and we were getting ready to have a daughter, and I knew I couldn't make a living doing that kind of the way I wanted to make a living. So I kind of just fluttered around as an entrepreneur. I started training real estate agents and lenders how to do marketing. I was actually teaching the very first classes on blogging back in those days, how to blog for your business. And Liz, one day, she knew I was like all over the place, and women don't like a spouse that's all over the place. They want some direction, some stability. And she had said, "Hey, why don't you? You've done taxes in the past," because she knew I did some taxes. Why don't you do what Ernie? Because Ernie had told me after he finished fixing me up, if you're ever thinking about a career change in the future, I think you'd be really good at this type of work. You seem caring. You like helping people. I think you'd be really good at that. So Liz had brought that up. Hey, why don't you do that type of work? It seems like that might be an ideal fit for you. And I actually started looking into it and eventually just figured out what I had to do. I wasn't going to become a CPA, and I wasn't going to become an attorney, the amount of schooling and going back to college. But I found out as I can become an enrolled agent. And there was only two ways to become an enrolled agent. Either you go work for the IRS for 5 years, and then when you leave, you have the right to test for it. Or you can literally study for a 3-4 hour exam on taxes. And I started doing self-studying, went to school, learned it, and ended up passing that exam. I passed that exam, 2017 is when I passed that exam. And that year was the year I decided I'm going to do 100%. My only job is helping other people deal with their tax problems the way I deal with them.
Well, there's something to be said, right? Like I really believe that sometimes our kryptonite becomes really our saving grace if we can turn that lemon into lemonade, which is what you did, right? You took that lemon. You could have always been down on yourself about it. And I want people to hear this. You could have said, "Oh, that thing took me out, and you could have just avoided it. But instead, you said, "You know what? I've grown empathetic around this issue. I've grown knowledgeable around this issue. I feel like I can add value to people because I've been there. So the level of empathy and connection is completely different level."
Right.
It reminds me of a buddy of mine that during the financial crisis, he was an investor and he had a bunch of houses, and he had to short sell all of them, and he thought that the government was going to come and he was terrified.
Right.
They were going to come and haul him away and put him in prison. He's like, the story you make up in your mind is way worse than actually what happens. But
Yeah.
He was terrified, and what he did was he ended up short selling a couple of his own houses in that process. And then he learned the process, and then he said, well, maybe I can help other people do this. And the next few years, he must have made $1 million a year for 4 years straight. It was crazy, right? And so he took all of that hardship and pain, which sounds like you did the same thing, and turned it into a force for good. And I want people to hear that, right? I want people to hear. I think that's important. So, with that story being told, Carlos, right? Where do you see people falling into this trap, and how could the real estate entrepreneur avoid it? What could they, what steps can they take? Or is it one of those where it's almost like they've got to learn how to face the music at some point. At some point you got to face the music. So rather sooner than later, putting your head in the sand doesn't work. How do
you basically, I think there's two types of people that are probably listening to this or watching this. There's the individual that may not have no tax problems at all. Everything's hunky-dory, everything's fine. And you want to kind of continue on that track and make sure you don't fall off the wayside, which can happen. I was just on another podcast where it was just the sale of a property caused them to have this multi-million-dollar tax debt that came out of the blue that wasn't expected. So you have those individuals not having problems, and you have individuals that are listening to this are like, Carlos's story sounds familiar. Either I'm dealing with the same issue, or I know somebody that's dealing with the issue,
or my spouse is dealing with the issue, right?
I was getting ready to say spouse because I literally had this last Friday. A spouse came in with her sister-in-law because she found out her husband who happened to go in the hospital for stress-induced anxiety, and she happened to go through the bedroom and find a bag full of IRS notices. And she had come to realize that he hadn't filed tax returns in over 8 years. So all of a sudden, she's dealing with this 8 years of non-filing of tax returns. And she was terrified, Rob. She's sitting there crying, I felt her pain because I can only imagine how she felt. I was thinking that because my wife, Liz, happens to sit she's the co-founder of our company. She was sitting there, and you know what? I'm listening to her story, and I'm almost thinking, this is exactly what Liz went through. Exactly what Liz went through listening to this. So these are the two types of people that are, ones that got the problems and one that don't have the problems. And for the ones that do have the problems, let's talk to them right now. There is the thing is that first understand if you got a problem, there is light at the end of the tunnel. There is a way out. I don't care whether you owe $10,000 or $10 million. There is a way out of this situation. You just have to kind of finally come to the realization that you have to deal with it. Because the one thing with tax debt, it literally snowballs and becomes this monster so fast. A lot of people don't realize that when you don't file or you don't pay, those penalties and interest can rack up to like 25% a year, really fast. So if you understand that it can be resolved, and you need it to be, you need to get on it now and don't wait. And one thing, Rob, that's happening, this is like current event stuff that's happening. Literally, the IRS just laid off 6,700 people last week. I got a bunch of phone calls from IRS agents that I was working with on cases, calling me saying that they've been fired, and my case was being transferred. And a lot of people are starting to think, well, maybe the new administration is going to wipe out the IRS and my tax debt's going to go away. Which, that's great wishful thinking for all of us, right? That'd be wonderful. We don't have to pay taxes. But the problem is, the speed at which the IRS is coming after tax debt that you currently owe is going to happen in weeks, if not months. And the speed on which a government agency can get shut down with court cases, Supreme Court and all that, that could be years down the road. So you can't ignore, those notices that are coming in the mail, because a lot. I just had like 30 of them come in this morning. A lot of those notices are literally giving you days. You got 30 days to respond before we go after your bank account, before we go after your paycheck stub, or for real estate. If you're a real estate agent listening to this, a lot of people don't realize, I was talking about this morning, is that the IRS can take 100% of all 1099 income. So if you're getting income 1099, it's not a 25% levy, it's a 100% levy. So that's the kind of scary stuff that's happening, and a lot of kind of misinformation with what's happening with all the craziness going on with the government shutdown, government employees being shut down, or agencies proposals to be shut down. In regards to people that aren't in that type of problems, the number one thing I can tell, real estate investors, people, entrepreneurs, is we all need to come to the realization is all the income that we earn is not ours, which is hard to understand that. The government wants its cut, whether it's the IRS wants its cut, or you live in a state with the state taxing agency, like I live in California, they all want their cut. So making those estimated payments the way we're supposed to is the one thing that can kind of keep you out of hot water. For people that are dealing with real estate transactions, the sale of property, things like that, make sure you have a tax attorney, a CPA, that can tell you what are the ramifications of selling a property. I'm getting more and more calls from real estate investors that sold a property not realizing the tax ramifications, or just doing everything incorrectly, thinking they did a 1031 exchange and then missing a deadline. And then all of a sudden they have these massive tax ramifications. And now we're dealing with, how do we deal with the tax debt that they got? Now that it's like, we can't unreverse it all. Now you got the tax debt, now we got to deal with it. The other big thing I've been telling people is, be careful who you go into business with, especially when partnering on real estate. Rob, the last 4 or 5 years, kind of during the COVID timeframe, the IRS pretty much stopped going after any tax debt. They effectively did. The IRS or Congress told the IRS, stop sending out notices for tax debt. There's a pandemic. We don't need to be going after people for their taxes during a pandemic. So all the notices kind of stopped. So a lot of people that owed money or didn't file tax returns during this time frame never got any notice, and a lot of them really thought that the IRS forgot about them. But it wasn't until summer of last year the IRS says, well, we didn't forget. We're going to restart sending out these collection letters, and we're going to start coming after these letters for the past due taxes or unfiled returns. So, and what I've started to see a lot of is that people got into partnerships with individuals to, whether it's to buy a property, and then they buy this property, they're in a partnership, and all of a sudden a tax lien gets slammed on the property. And they're like, well, what's going on here? Why is there a tax lien on it? Only to find out that their partner either had a large tax balance due that they didn't know about, or they ended up with that large balance due or hadn't filed taxes. And because when you don't file taxes, the IRS will file a return on your behalf and will create a balance. And then they're allowed to file tax liens and levies based on the balances that they actually came up with. So all of a sudden now they got tax liens on properties. Now they can't do nothing with the property until that tax obligation is taken care of.
Where do payroll taxes fall into all this? Because I've seen people, I remember walking through a $2 million house that was being foreclosed on, and there were so many notices like on the kitchen table, like they pretty much had abandoned the house. And it was like this really successful restaurant, right, that had been in business for like 40 years.
Right.
And somewhere along the way, somebody messed up on payroll taxes or payroll, and the next, and there was a massive lien. We couldn't buy the house because the house was just levered up with liens, right? Tax liens.
Yeah, here's what's interesting with payroll taxes. The thing with payroll taxes, it's the only tax you can actually go to jail for. You can owe the IRS millions of dollars of income tax and never go to jail for it. All they can do is try to collect based on what you own, right? Payroll tax, and for a lot of people that don't know what a payroll tax is, if you ever look at a paycheck stub and you see, the money that's going to federal taxes, Social Security, Medicare, all that on there, well, when you have that paycheck stub, what happens is that you pay half of your payroll tax. That's what you're seeing on your end of your paycheck stub, but your employer actually pays the other half of that. So you're only paying half of your taxes in essence because your employer is responsible for that. So the part that the employer is responsible for is part of your payroll taxes. Well, what happens is that when that business that you see that money being taken out, that money goes to them, and they're supposed to remit that money to the IRS.
Oh, so it's like stealing.
It's a trust fund. It's basically they're taking it from you to send to the IRS. So that's why the IRS, it's called a trust fund. When you owe payroll taxes, it's called a trust fund penalty. So technically the company has the money they took from you and the money they're responsible for, and then that's all supposed to go to the IRS. Well, here's what happens, and you said it perfectly. The reason you can go to jail for that is because you stole money. You stole money from your employee that is supposed to be going into their system, their Social Security, right? And you took it to spend it on whatever you spent it on. And what happens is that these businesses, they'll get into a cash flow challenge, and they see all that money coming in, and instead of sending that money off to the IRS, they actually pay, they pay their vendors, they pay for their rent.
Yeah, they try to keep the business alive.
Got to keep the business alive.
And they try to catch up. They don't. I guess it's when they're doing it and they're not automating it, like, because it's just automated these days. Like maybe they're like doing it themselves. And that's usually that's usually what happens. So what happens, and it's funny you mentioned that, because I just had somebody, he hasn't become a client yet, we just had a conversation, extremely successful businessman,
had a company worth $500 million in the biotech field. And he literally was calling because the business basically got shut down. During COVID time frame, everything just kind of shut down. And he had $3 million of payroll taxes that were due for his company. Company's not even operating anymore. Has a $3 million payroll tax problem. And remember, that's half, $3 million, but half of that was a trust fund. So what happens, the government takes half of that money and attaches it to him personally. So we can actually get rid of the taxes from the company because the company is no longer operating, but all that payroll tax, the trust fund part of it, went to him personally. And now he's personally responsible for all that payroll tax. And he has some real estate, and it's all being attached to his real estate. And it's kind of like what you had just mentioned there is he's not going to be able to do anything with his real estate unless that's paid for.
Yeah, brutal.
Yeah, the payroll taxes are not. If you're listening to this and you know you owe payroll taxes, you will get a revenue officer attached to you, and they will come at you full force. The IRS doesn't. You are a priority to the IRS for collection. All payroll taxes are priority over everything else.
Yeah, that's fascinating. Now okay, where else do you see? Because that was one I noticed. I was like, how did that happen to them? Successful business, payroll tax, and I'm like, they must have been doing it themselves. They must have then, been thinking we can catch up at some point, and then it just snowballs. And it's like you end up thinking you're doing the right thing, but you're not doing the right thing because you're not kind of confronting the real problem. You're kicking the can down the road, which I think is probably one of the lessons here. Like, don't kick the can down the road. Face reality. Look at reality. Deal with reality. Right? Don't be the ostrich.
Especially right now, Rob, because one of the big things with the IRS's recent layoffs, and they're planning on announcing some more layoffs. What's going to happen is everything's going to start getting automated. So it's like we're dealing with AI. It's going to be computer systems. And when these letters come out and they're going after bank accounts and they're going after levies, they're going after bank levies or wage garnishments. We personally that are dealing with this, we got less people to talk to. It's going to be harder for us to get a hold of somebody to possibly stop or reverse this or get into any type of resolution. So it's going to get dramatically scarier going forward. So we've been notifying all our clients right now that are on active collections, we need to move fast while there's at least people there to be able to speak to deal with your case. We can no longer delay because we don't want to deal with, as much as a lot of people got super excited, they're shutting down the IRS or they're going to cut them down. Problem is, almost everybody that they're getting rid of is part of their customer support. When you call the IRS and say, I've called 3 days and I can't get through, well, it's because they got fired. That's kind of what's happening. There's not enough people to pick up the phones to take your call.
When I saw them shutting or laying off a lot of people from the IRS, first thing that came to mind was it's probably going to slow things down. Second thing that came to mind was, no, you've got Elon Musk that's going to put AI in there and they're just going to speed up,
Bingo.
a lot of the letters that go out, they're going to speed up.
Yeah.
They're going to catch a lot of the inconsistencies and red flag them, right?
Bingo.
Faster. And I was like, here.
No, that's
cross all those T's.
I'm glad you brought that up because that's exactly what's going to happen. Things are going to get worse, not better from a collection standpoint. And I know 1,000 people that were fired were all part of the IRS's collection department. So we know it's going to be a lot more automated collection stuff that's happening.
Oh man, that's crazy. That's crazy. Okay, if somebody needs to get a hold of you, Carlos, to kind of maybe they're listening to this right now and they're like, okay, I need to confront reality.
Right.
I know that you've written books. I know that you but what's the best way for people to reach you?
Well, what I'm going to encourage everybody to do is, grab my book. I wrote a book called How to Make the IRS an Offer They Can't Refuse. It's a simple to easy to read book. You can pick it up at taxdebtbook.com. taxdebtbook.com. Get that book. Has all my contact information in there. But I encourage everybody to read it. If anything, read the first chapter. I talk a little bit about the story I just talked about, but just what options are available to you. But if you're in that situation where you need, you've gotten that certified letter in the mail, which basically is giving you 30 to 60 days to respond. You can go to taxdebtconsultant.com. All my contact information is there. And we'd be happy. What I do with everybody, and I think is why I have so many great reviews, is that my job is just to listen to their story to see kind of what's going on and kind of give them an idea of a roadmap. And there's no cost for the call. Give you a roadmap. Here's where you're at, or where you at least believe you're at, and here's some options. And there's been, I would say 20 to 30% of the time I get people that call me and I say, you don't need to hire anybody. You don't need to hire us. You know what? Call this phone number, and I got a list of phone numbers, and just say these couple of words, and you can get this resolved based on your situation. There's no, it reminds me, I literally had, Rob, I had a 78-year-old woman that called me panicking because she had gotten a letter from the IRS. She had called one of the national companies you hear on the radio or TV stations that advertise, and they told her that it would be $10,000 to resolve her problem. And, this lady was on Social Security, and she ended up seeing my Facebook, saw me on Facebook. So she called me, and I'm literally reading the ad, and I almost threw up in my mouth. Because what the letter was stating, it was from the IRS, letting her know that the IRS still had her in a non-collectible status, and they weren't going to do any further collections on her moving forward. They were just giving her an annual update. And this company was trying to take $10,000 from her based on...
Yeah, she was scared. They get that letter with the letterhead from the IRS.
IRS, they just panic. And this letter was literally saying that we're not doing any collections on you. Yeah. And somebody was trying to scam her out of 10 grand. Yeah, like, really? Come on.
I would imagine there's a lot of that. There's a lot of that, right? Actually, just as I think this through from a lead generation, sorry, my brain's always thinking marketing and lead generation, right? Like, from just like a lead generation perspective, years ago, I discovered the power of blogs. Funny you were talking about blogs, right? And I had created this blog called Virginia Short Sale Advice. Okay. And it was to help people navigate the complexity of doing short sales during the financial crisis. And like my phone would ring off the hook during that time because it was just, it was the market of the moment. Yeah. But I remember I remember feeling this sense of satisfaction, helping people just navigate and feel better about the situation, right? They would always be like, I just feel so much better after talking to you. So it was like a therapist almost, right? Because people thinking they're going to go to jail, getting thrown out. Right. Sometimes you could just like call this phone number, say this, right. Modify your loan, right? But I would imagine that there's no shortage of people that are in trouble with the IRS, right? This is just knowing the entrepreneurs in my world, right? I've seen people in my, teams and organizations that I'm like, you got to deal with that. You got to just like go negotiate that. You got to go deal with it, right? Like quit hiding from it. It doesn't get better, right? Same thing with like medical debts, like go deal with that, right?
I just saw, the last time I look at recent statistics, there's 11 million people in the country that haven't even filed a return in years. They're flagged as non-filers. I mean, years. And that doesn't even include the hundreds of millions that probably owe taxes to the IRS. And whether that's 5,000 or 5 million, there's just... the saying is like 1 in 6, 1 in 7 people have some type of IRS issue going on right now. And one of the things is that, and I talk about it in the book, is that it's not like IRS debt is a common talking point at your local family dinner, right? You don't go to Thanksgiving dinner and say, hey, I haven't filed my taxes in 8 years, or I owe the IRS $30,000. it's a secret. It's kind of the America's unsung secret, or in the book, as I call it, it's omerta. If you remember the Godfather movie,
Oh yeah.
omerta, mafia members don't talk about the mafia. They don't mention the mafia. Well, tax problems are that basically omerta is that you don't talk about it. And so, like for me, for all those years that I was going through those challenges, I didn't know there were people that specialize in this type of work. Had no clue. Until I started doing research to find out, oh, there's actually people that can help you with those types of problems. So,
And I guess that brings up a valid point that I'm sure somebody listening to this, right, like probably wants to know is if they are in IRS debt, let's say they owe 100,000, like you owed 100,000, right?
yeah.
Is there hey, this IRS debt is negotiable and you could get it to 50,000, 60,000, 70,000? Is there like an average
Yeah.
that you can negotiate type of thing if you have the right partner?
You know what? It ultimately comes down to your financial situation. And I tell people, usually with a 5 to 10 minute phone call, I can tell you, I just got to ask you a couple of questions whether you're going to qualify for that. Give you an example. Let's just say you just said $100,000 debt, and and Rob, you're calling me. You got to, you have this fictitious $100,000 debt. You want to know, hey, will the IRS negotiate with me? Here's what I'm going to ask you. Well, one, what type of assets do you have? With most people, let's just say most people might own a home. And if they do own a home, here's the number one question I can figure out whether that's even a possibility. How much equity do you have in that home? Because if you have equity, and a lot of people unfortunately do have equity because of the equity growth over the years, the chances are slim to none. A lot of my Southern California homeowners the last few years, they got $200,000, $300,000, $400,000, $500,000 of equity in their home. If you own a $100,000 home, a debt, and you got that kind of equity, the IRS is like, no, we're not going to negotiate. We're just going to pop a lien on the property.
Pop a lien and they'll wait you out.
And we'll wait you out, and we're going to get paid.
And they accumulate. It accumulates.
And they keep on. People always ask, will they continue to charge penalties and interest? 100%.
Yeah.
It's baked into the law. They have to do that. So now the next question comes: can you afford an installment agreement on that amount? That might be a totally different story, because a lot of people don't realize tax debt gets more expensive on a monthly basis the older it gets. And the reasoning is that the IRS technically only has 10 years to collect on a debt. So if you had a $100,000 debt 5 years ago and did nothing for 5 years, $100,000 debt, had you had started an installment agreement, I'll give you the number. So $100,000 debt, and they have 10, let's just say 10 years to collect, you might be looking at an $800 monthly payment, right? But if all of a sudden there's only 5 years left to collect, that monthly payment becomes $1,600.
They speed it up. Yep.
They because what are they trying to do? They're trying to collect on that debt before it expires.
Interesting.
So I always tell people that's why if you call the IRS with your large tax debt and they say your minimum installment agreement is going to be $1,600 a month or $2,000 a month, you may not be able to afford that. That's where we come in and say, hey, they can't afford what you guys want, but here's what they can afford based on their income, their living expenses.
You work out a whole formula.
It's basically formulaic on how we come up with that number. People always think that we just pull a number out of the air. No, there's strict formulas on how to figure out that number.
Yeah. Yeah, interesting. What am I not asking you? I think is a question, right?
You know what? You asked some really good questions. It just goes back to this. It's just I'm telling people, please don't wait, because it's going to get much harder to deal, as I mentioned earlier. And if you got it, the thing is, if you got a tax problem, you got a tax problem. You're listening to this and it's hitting you hard. And the problem with tax problems, not only do they get worse, but it affects your health so dramatically. Yeah. The years that I went not filing, Rob, for years I thought I had a heart problem. Literally, my heart was like constantly. Yeah. I would get like. Yeah. There might have been panic attacks back then, and not realizing they were panic. And then for years, I didn't even want to see a doctor because I didn't want him to tell me I had a heart problem. And only to find out later, it was the stress of dealing with this thing. You know,
Carlos,
and,
one thing that comes to mind for those that are listening, that are newer on the journey, I think the advice that I would give you, that Carlos would probably give you, is make sure you just set yourself up correctly in the beginning, right? A lot of people sometimes just start out there doing the hustle, making additional money, and don't actually have a good fiduciary to say, like, hey, this is how you're going to set up your business bank account, and this is how you set up your personal bank account, and we realized that this was something we needed to do within our company for newer agents and investors coming into our company. My wife one day said, your agents and your investors are making a lot of money, and I'm seeing some of them over time get in trouble because they didn't set themselves up correctly.
Yeah.
Let's make it mandatory so that when somebody comes into the organization, we're setting up their business bank account, we're setting up their personal accounts, we're showing them how to do profit first, which actually siphons off some of the money for taxes. So my advice to those going on the journey is go read Profit First, right? Talk to a business owner and have them give you some advice. Hire a good bookkeeper. I think that was a mistake I made in the beginning. Was I chose the cheapest bookkeeper around, and let me tell you,
I'm so happy you're bringing this up. This is like a huge thing.
Yeah, that cheap bookkeeper cost me so much money, right? Because they did all the stuff wrong, and I didn't know, and then we had to go fix it, and it's like, I'm like,
Rob, I'm so happy you brought that up because I do a lot of workshops for local real estate, lunch and learns and things like that, and it's shocking. I've had people where they'll bring in their taxes to get prepared, and we're in tax season right now, and I'm looking at this and I'm like, don't you spend any money on advertising? They're all, yeah. You can write that off. Did you spend money for your for these listings that you and they just, as you said, I'm so happy your company does that because they don't even have the basics down. Are you keeping track of your miles because you're driving all over hell and back? That's one of your biggest tax benefit. Oh, I didn't know that. So I'm so happy about this.
Nobody teaches it. Actually, nobody at the brokerage level. It's not taught.
Wow.
It's like what's taught is how to go get a listing, how to go get a buyer, right?
Yeah.
It really isn't taught. I'm sure there's brokers out there that teach it.
That
Right?
teach
I know
that, right.
that we started implementing it. We started bringing in bookkeepers and to help everybody set themselves up. Finally, my wife was like, I'm just going to do it. She loves that stuff, right? She loves that stuff. But so if you're newer on the journey, I would say pay the additional $150, $200, $300 to get the expert to do it, because you don't want to do it. I was definitely that, by the way, right when I started, I think about it, I was definitely that shoebox receipt guy that was scrambling at the end of the year, trying to put it into a spreadsheet to give it to my book. And I'm like, why did I just pay somebody to do this during the year? A couple $100, right?
Right.
So don't be penny wise and pound foolish. Is the message.
100% agreed.
Well, Carlos, thank you so much for sharing time on the income flip. This is an important discussion for those that are looking to build wealth through real estate. These are one of the things entrepreneurs get themselves into trouble. Know that you can get yourself out of trouble, but you've got to face reality, set yourself up right in the first place. And if you do find yourself kind of in that holy smokes moment, right, to keep it PG, call Carlos. Get in touch with Carlos. He can help you.
Sounds good. And I appreciate you taking the time to bring me on here. Thank you so much.
My pleasure. Thanks, brother. Bye.
Bye-bye.